Alright guys, welcome back to another market daily market review. Today is June. I'm looking at June 2nd price action, June 3rd price action actually. June 3rd. So let's take a look at what happened. Hey brother. So yesterday on Sunday when I was doing the live weekly the coverage, what I've noted was, so initially I was looking at something like this here. So I was looking at the S&P divergence at the lows here on the 5-minute chart though. This is not present on any other time frame, okay? This is only there on the 5-minute. So I was looking at, I assumed the high is set. So I was looking at this dealing range, and I was assuming, because there was S&P divergence at the time of that recording, I was assuming a pullback into range EQ or discount PD area, and that is this fair value gap right there. So I annotated that as discount fair value gap yesterday and expecting a pullback into there and a rally afterwards, because we're looking at a couple buy side targets here. Let's delete that here. First one, the short-term buy side, buy model objective, and then we had the real buy model objective, which is these highs here, because those highs are the S&P divergence. Let me pull up ES so you guys can see better. Fuck, the recording got stopped. So anyways, the divergence over there, hold on, let me see. I think it was this one. I don't know why I deleted that. And why am I on micros? Hold on, guys. This is fucked up. Let me switch back to the regular NASDAQ. Okay. Here, the internal range high was the first target, and also short-term buy side, obviously, was the target. It took it out overnight. And this side is the market maker buy model objective. So, by that being said, we were looking at the discount PD array from the dealing range. So this is the S&T divergence right here. So that's our sell side and also dealing range low. So before market opened today, New York open, a couple of things just struck my eye. First thing was the short-term buy side was already taken, right? The end wall rather, stand there. Then the H1 internal buy side was also taken out before New York opened. So I'm going to delete all that. So here, what happened was, initially I didn't know, or we don't know the high, whether the high is set or not. But here's what happened. So this is 9:30 open candle. It rallied, right? Tried to reach the buy side objective, but immediately after it displaced lower. Now in that displacement, it doesn't necessarily mean the high is set, okay? But what happened afterwards was telling me the high should be set because there is, so it formed an S&P divergence at the highs with the 10 o'clock delivery. So here, actually not even that, but this is on the 1 minute. Let me switch back to 1 minute. Hold on. This is a 1 minute S&P divergence at New York Open. So here you can see the S&P divergence. Nasdaq is making a higher high, and ES at the same time. What it did was, here this high made a lower high. Okay, so once I saw that S&P divergence, I was like, okay, the high is set. Now we have a dealing range for a pullback, right? So from the S&P low on the 5-minute all the way to the New York Open high, and we get the same discount range, technically speaking. It's a rather deep discount, but it's a discount PDRA at the end of the day, right? So here, the whole area right here is a discount PDRA, right? So I'm going to keep the lower one because it bounced from there. But it doesn't really matter, because if it used the upper fair value gap here, you would have had the lower time frame reversal there. If it was to use the upper one, you would have had the 1 minute reversal or lower time frame reversal there. Okay, so it doesn't really matter which one you utilizes. Okay, and remember, like, it's always hard to anticipate where the pullback is going to be, whether it's going to be into range EQ or slightly deeper than range EQ. And if you have a couple different PD arrays in the discount zone, it makes it really hard to anticipate a precise level, right? So anyways, let me go back to 1 minute and let's let's annotate the sell. So initially, SMT divergence, displacement, right? And that displacement was it's basically a fair value gap, right? So here, let me annotate the lower one because that's the accumulation fair value gap. The upper one is IFED fair value gap. It doesn't necessarily go up there, but it did because there was 10 o'clock news, red follower news driver. But what is more important in this price action is, so initially it formed divergence at the lows, right, which is bullish. But now that means you have a short-term dating range from SMT high to SMT low. Now you look at, if you're bearish, you look at the range EQ or slightly above, right? The price after forming SMT divergence down there, there's also a trap. It delivered buy side, right? In that buy side delivery, one thing happened. It actually formed a new divergence there, which is a bearish divergence in this case. So that bearish divergence right below the CE of the fair value gap, the CB, and in premium of the short-term dealing range, which sent the price to its low-hanging fruit objective, SMT low, and it kept breaking down, right? Came all the way down to NWOG low. Now, let me go down there with ES as well, so that we can take a look at if it formed any kind of reversal or not. So here, as you can see, it got stuck in NWOG low, NWOG range initially. Delivered to sell side one more time, but in that delivery, there's no trap, there's no bullish signal, there's no smart money reversal, or there's no SMT divergence, bullish SMT divergence, right? So it rallied, formed a fair value gap here with the breaker block, but still no bullish SMT divergence. So that is a fake out, okay? That's how you can filter out the fake, quote unquote, fake rallies, okay? So here, let's take a look at those lows. I think that could be, let's see. I guess you can take that as an SMT divergence, but again, it's an SMT divergence with equals, okay? You got to be careful with that. Regardless, it delivers the buy side here, so short-term buy side was gone. This is the first divergence, comes up, and here it formed a new divergence, right? Now, once you have that here, pretty choppy, I would say. This is a high resistance run. Let me annotate the bearish divergence here. Now, once that bearish divergence is set, now you can technically think about a pullback, right? So here's the dealing range, comes down to range EQ, delivers the second stage, and that second stage, you target the short-term buy side, right? So you go step by step. Now you have the sell side here. If it breaks down, you look at that sell side and range EQ high. Now here in this price action, what happened was both assets actually targeted the short-term buy side, so it delivered both assets. But if you look at what happened afterwards, so here it failed one bullish PD array, second bullish PD array here, and then there's an order block here. The order block was taken out too. So if this is an order block, it shouldn't violate order blocks low, right? And it did it even with the rally itself. So you can think bearish there, and you can actually anticipate the high being set here. So now you have this area as your premium array, right? And in that fair value gap, something magical happens again. Now this is choppy price delivery, by the way, don't get me wrong. During live reading, or live trading, this is not easy to see and anticipate, okay? Don't get me wrong. I'm looking at it in hindsight. It's obviously easier to see it in hindsight, but that's how you learn. So here it goes for the buy side, rather premium fair value gap one time, comes for the second time. Now, once it comes for the second time, it forms a divergence. Okay, now you have a new divergence, which is a bearish divergence. Now, that bearish divergence's objective is what? To deliver at least the low-hanging fruit objective, which is here. Okay, this is the range, which is there. So it delivers that. This is the low-hanging fruit objective. This is not the market maker sell model objective. The market maker sell model's objective is S&T low, which is original consolidation. So it delivered that, and with that delivery, it formed a new divergence on 5-minute basis. This is not a 1-minute divergence. Here, again, ES left equals. So the divergence, the new divergence. I'm saying a lot of divergence today. So that bullish S&T divergence's objective is what? Deliver the short-term buy sign. So it goes for the buy sign, but stalls, right? Price never even violates the premium fair value gap. The bodies are respecting the CE. That's your first signal of downside, further downside delivery, okay? And in that delivery, again, it forms a new bearish divergence. So here, I'm delete that. I'm gonna clean them here. Nasdaq couldn't make a higher high. ES made a higher high, so there is a new bearish divergence in premium. So by using that as a catalyst, market broke down. Now it tagged the market maker sell model on the 1 minute, and it's sell side. So it broke down for the low and keep going lower afterwards. Okay. So here, as it broke down, right? As it broke down, there was no signal of any kind of reversal, so it kept going and going, going lower and lower. And this is the higher time frame dealing range. Okay, this is, let me make it red. This is the dealing range I annotated from the 5-minute chart. Now we are trading down there, so we are in discount at this point. Here it goes for the last premium fair value gap and keeps going lower afterwards. And take a look at the lows. Okay, I want you to understand this. There's no reason to go long in this price action, in this kind of price action, because it is never forming any kind of reversal pattern. Okay, and the reversal, as you guys know, is either trap or you got to see an S&T divergence, right? So there's no trap, there's no divergence at the lows. This is, yes, I'm not bullshitting you guys. You guys can also take a look at it. No divergence, still no divergence, still no divergence, okay? In fact, it's forming more bearish divergences here. This is a 5-minute divergence, not a 1 minute, okay? Now you can think going even more short entries, okay, with those divergences. Those are the clues, those are the signs of more sell side deliveries on coming, okay? So here, deliberate more. I'm still looking at the lows, okay? As I go through this price action, there's still no bullish divergence. Then it came all the way down to that 5-minute discount fair value gap. Oh my God, what's going on? Sorry guys, hold on. My computer just got stuck. Okay, the record is on. That's what matters. Wait, I can't use... Am I getting hacked? What's going on? Jesus. Holy shit. Okay, the recorder is still on. That's what matters. So it goes for the sell side and goes for the discount fair value gap that was annotated on the 5-minute, and it tags its low, delivers algorithmically, and forms. Jesus, my computer. It forms a V-shaped reversal. Here comes for the low and reverses sharply. Okay, this is what we call sharp turn, sharp reversal, whatever you call it, V-shape. Anything is fine. Like, it doesn't even matter what you call it. So when this happens, you expect at least one bullish divergence to go long. Okay, you don't long like here. You don't long it. Okay, you don't touch it. You just wait for that divergence, and you either turtle soup it, or you long its order block. Okay, now here technically there's no divergence. It didn't form a divergence, but What there is, so if I go down to 30 seconds, that was a trick for today. It formed the bullish divergence. I'll pull up ES as well. So this was a tricky one because most of you guys don't even have access to 30-second chart. And for me, because I was expecting some divergence, some sort of divergence, I was like, okay, let me go down to the 30-second chart and see if there is a divergence or not. So here, it diverges, forms the very first bullish SMT on the 30-second basis. Now, because it's on the 30-second, I recommend staying on the 30-second, okay, until it forms a bearish divergence. So it helps you to establish the dealing range, okay? So here, I'm watching both assets. Short-term buy side is gone. You can long this as well if you want to. There's nothing wrong with that. Or you can wait for the order block here, the S&T order block. Once the price touches there, you long that. Stop loss is below the S&T. Okay. So this is the first leg initiation. Runs. Now it's in premium. Forms order block. Goes for the highs. Goes for the highs. And there's no bearish S&T divergence in this leg until up here, okay? There's the bearish SMT divergence, the very first bearish SMT divergence, which means what? It means now the dealing range is established for the second stage setup, okay? Now you have SMT low, SMT high. This is the first leg dealing range. Let's change the color though. Let's make it black. I'm going to delete the other one. Now you have the dealing range. Once the S&T is there, now you can expect a pullback or a reversal. And if this is a reversal, it's going to displace through the range equilibrium and go for the S&T low. Okay, that is the sell model. But here, we stay bullish. Higher time frame is bullish. There's no reason. I mean, before it comes down to range EQ, you can already anticipate range EQ will react. So here's what happened. Broke down, okay? And as I'm reading this, please take a look at the highs and the lows. If you see any long entries before range EQ or short entry, not short, but long entries before range EQ. Personally, I don't, because I know for a fact that these rallies, even though it's forming order blocks, bullish breaker blocks, displacements, and all that jazz, I know you guys will know too with like more once you get more experience that the middle rallies, but what I mean by that is if it's not coming from at least range equilibrium, it never delivers the buy side, okay? Those are the fake outs or inducements, whatever you call it. So it goes for the buy side, tries to go for the buy side, never delivers, breaks down very sharply, comes down into discount and range equilibrium. Now in that discount area, there's a fair value gap that you can technically look at, and also there is an order block. Now it doesn't necessarily hold that level. It could have just touched the range EQ, wicked it, and reversed afterwards. It could happen that way as well, okay? So here, what's more important is how it's reacting off of the discount or the range EQ. So here, let me establish the ES's dealing range as well. ES also comes down there, you see? That is algorithmic delivery. Now what we're looking at is, let me switch to one, never mind. So once it comes down there, because we're bullish, we have S&T high is our low-hanging fruit objective, okay? This is the highest probability buy side target, and this is the scalp, okay? Anything beyond this level is day trade. But if you just like trade this long from here, targeting the low-hanging fruit buy side, that is a scalp. That's a scalping model, okay? Here, what happens here is there's a CB, okay? And the reason I'm looking at it on 30 seconds is for a specific reason, guys, okay? Please, please, please don't ask me this question anymore. Why this time frame, not that? Because the SMTs are on this time frame, period, okay? There's no other reason. I'm not like a huge fan of 30-second or 15-minute or whatever, okay? They're all the same to me. This tab on top of the trading view Does not matter to me. I don't even look at this, okay? So I used to have those confusions like you guys have too, but not anymore. And that's why. So this is a CB accumulation at range equilibrium. It flips the CB. Now this is a trap. Golden zone. Hold on. Golden zone. What the fuck? Come on. Come on. Oh my god, bro. I'm going nuts. Oh my god, what's going on? Uh, I'm actually a very impatient person in real life. Like, no cap. I'm actually an impatient guy. And I know this since I was fucking 10 years old. Alright. I don't know how I'm so patient in the market. So it forms a trap. 218 candle closes outside. That's the confirmation. This is also silver bullet. You can consider this as a silver bullet. This is a trap fair value gap, which should hold. Now, what that means is the low that forms the trap, right, is or should be a safe low. That's what it means. Now, it could come down to trap fair value gap if it wants to 10 times. It doesn't make market bearish, okay? Unless it goes for the trap low. That changes the sentiment. Not coming down into trap fair value gap, okay? So here, come on. Here, it runs for the highs, right? You don't see a bearish divergence still. Comes down. I mean, there is one like here maybe. And because of that, it retraces one more time deeper. Now, this is the ugly part of the market. Today was rather choppy, and almost every 50-minute candle and 5-minute candle had an immediate rebalance. So today was choppy a little bit, but it was still readable in my opinion. So it comes down into range EQ one more time, also the fair value gap, and delivers the buy side from there on. As you can see, longer fruit objective is completed as it trades above it. Now this should be your partial, first partial, and then once it trades above it, that's when you need to put your stop loss at break even or in profit, okay, if you want to keep holding. So let me switch back to 1 minute from here on. I'm going to keep reading this. All right. So I'm here. It runs the low hanging fruit objective. This is the second leg. So what happened afterwards was, let's see, didn't look at it that much today. So it broke down, it reacted from that level, which is also the CE of NWAG. There's a busy, it forms, does it form an SMT divergence there or not? Let me see, hold on. ES doesn't look really cool. Kind of forms an SMT divergence though. Equals on one side, high on the other side. So I would say that's a divergence. Now you have a needling range because of that. Or in fact, you can take this rather, because that's the SMT. So it goes for the range EQ one more time, short term. This is the ugly part of today's price action though. It doesn't have to do this kind of price move, okay? So it comes down to short term dealing range EQ, flips the BISI after accumulation. Now you have a new trap. Now this becomes the trap fair value gap, or BPR, whichever you want to call it. This is also BPR, or you can call the piece BISI or whatever. Then sends for the high buy side one more time. Now as it goes higher here, let's see if it forms any bearish divergence. So initially here is a bearish divergence, okay? It delivers what? It delivers the sell side, because now you have a new short-term dealing range, comes for the range EQ, touches the discount PD array, rallies, delivers the buy side. These are like smaller microsecond time frame market makers, sell and buy models basically, but I'm looking at it on the 1 minute at the moment. So don't get confused. Like, don't ask me, or you guys can ask me, but I'm gonna explain it already. Why am I looking at this dealing range? It's because we have a smart money reversal in the form of trap here, and an SMT divergence at these highs. Now this is not an SMT on the 1 minute though, okay? This is probably a 30-second SMT divergence, but I'm looking at it on the one. So it comes down into PD discount PD array, runs the buy side out again. So here it forms a new SMT, bearish divergence. I said SMT divergence a lot today. So here forms a new divergence with equals again. Now you have this dealing range here. Okay, this is the 1 minute pullback into range EQ and runs for the highs afterwards. And in that rally here, in that rally, the first target, the highest probability low hanging fruit objective is what? SMT high. Okay, as it touches there or trades above it, that's where you need to take your partial, one, and secondly, stop at break even period. I don't want you guys to hold your stop losses um, at green or like at your initial placement. Okay, once it trades up into the low hanging fruit objective, that's it. Stop at break even no matter what. So here it tries to run the buy side. There's still no SMT divergence. Comes for the fair value gap, rallies afterwards, and tries. I think it's just like again tries to reach towards the market maker buy model objective. However, here's what I'm going to do. We had so in this whole hold on, let me just make it bigger. In this whole sell side delivery here, okay, there was only one divergence, okay, and actually like two divergences. Now those are my highest probability targets, and that is why I mentioned only one level today, which was this one, the very first bearish S&T divergence high, which is 626. Okay, that is the highest probability target for my second leg. Now as it expands further, I would be looking at this high. Okay, let me delete all that so you guys can see it better. This high, because there's another S&T divergence, and ultimately this high. So step by step, these are my three targets. But because today it came down to range EQ of the first leg at almost 2:30, it was pretty late in the day. That is why I mentioned this divergence instead of the other ones, or this or this, whatever. I don't remember which one, but here, this one. And then complete the buy side. That's how I got the target. So once it forms the first leg, you look at the opposite side of the curve, which is the sell side. Where's the closest bearish SMT divergence in that delivery, in that sell side delivery? That is the highest probability target, basically. Okay, you can target the externals as well, like this high as well, if you want to. But that high, to me, is not the highest probability target. It is a high probability target, but not the highest. The highest are always the SMTs. Okay, as you can see, like here, let me zoom in a little bit. So this is the SMT high. Then you have this external, or I don't see it as an external, but let's call it external for the sake of this conversation. Here, if you look at the reactions, the reactions are always going to be from the SMT highs or SMT lows, okay? That is the ultimate target for the algorithm or algorithmic delivery, not the other ones, okay? Now, if it goes for the further and expands, obviously you're looking for the other SMT highs, basically. But this is a very good partial, or personally, if I was able to trade this, that would be my ultimate target for today. I wouldn't be looking or holding any other contracts after that level. So that being said, going into tomorrow, I have these levels down. 710, this is a target, and ultimately 755 is another target, and then 787. I think we can reach there before the potential pullback. Let's take a look. Let's take a look at where it could pull back. So the red line here is a breaker on a higher time frame with a fair value gap. That could be a that could give a high reaction. But let me take a look at the lows here before the rally. If there was an S&T there, so I basically do the same deal as I go forward in the price. Seems like this is the only S&T average. That's the 30-second though. So here I think we have, yeah, that's another 30-second SMT there is. There's none on the 1 minute. So I'll take it from here. This is a 30-second though. Let's let's take a look at the highs as well. So the highs, oh actually yeah, okay. There's divergence probably on the 5 or 15. So that should be the high. And what we're looking at so far, I mean, this is, you know, too early to tell, but the discount fair value gap below the order block could be a potential pullback. And then I think from there on, it'll deliver the buy side. Again, the targets are today's 1 minute S&T divergence is on the bearish on the south side of the curve. So 710, 755, 787. Okay. So, yeah. Anyways, thanks for watching me live, being an audience. I hope you did well today. I don't know if you traded, but I'm gonna go over the general chat in a bit and see pictures and exercises channel shortly. But for the EOD markups, EOD market rate daily review, that is it for now. For me, this looks like ultimately. Here's what I'm looking at basically. On another perspective. First leg comes to range GQ. Now it's the second leg on this time frame. Okay, and the second leg's target is what? It's this one. Low hanging fruit objective, and then it should keep going higher. But I don't know. Maybe it will reject. I don't know. We'll see. I'm favoring further buy side delivery though. Anyways, thank you guys for watching this. I wish I would have been here today, and I wish I could be there tomorrow, but I'll probably talk to you guys during the live stream, on Wednesday. Rest assured. Until then, take care. Have a great night.